Hello, this is the second topic. We're having on strand number 4, measuring periodic income. We have started with balance day adjustment, and we have completed balance day and prepayments. And this is a second topic on balance day adjustment on accrued expenses. The objective of this class, at the end of this session, you should be able to define accrued expenses. So the information on a timeline, determine the general journal entries, so the effect on the new trial balance, the effect on the profit and loss, and the balance sheet. All these are just similar to the previous topic that we have covered on prepayments. What is accrued expenses? Okay, that's the first thing we have to ask ourselves. What is accrued? According to the summarized version of our Google dictionary, it says accrued meaning accumulated over time but yet to be invoiced. So there's costs that have been accumulated over time. There's another word that some textbook uses as arrears instead of accrued. Money that is owed and should have been paid earlier. Accrued expenses is therefore meaning expenses due or yet to be paid. Therefore, longer definition of that would be, these are expenses that have been incurred during the year but still yet to be paid. Other terms that can be used are expenses due, unpaid expenses, expenses accrued, expired costs, or expenses in arrears. Expenses, accrued expenses in a timeline. So this is timeline, the purple line, like what we have been looking at from the previous two classes. The purple line indicating the normal accounting period from the start to the end, and the balance day is the ending part. And expenses, accrued expenses, is indicated by a blue line that comes short towards the balance the adjustment. So therefore, the expenses that have been paid but not paid in full, it says the blue line representing expenses paid not paid in full. Okay, so therefore the amount that is still due, we call it that expenses due. We have to be added onto that in order to get the full amount that we need for the whole accounting period. Blue line representing the amount that have been paid. It says that incomplete payment, and we have all expenses due at the end of the financial year must be added to the expenses account to obtain the full expenses value. So the value of the expenses for the whole year is needed to be recorded for this year, using the matching concept. Expenses for the year, meaning the full amount for the year, including the expenses due. So that's why we have to add the expenses due. Amount due is regarded as our current liability because it's the amount that we owed. So we have the general journal entries. We have debit expenses, whatever expense it is, whether it's insurance or advertising or interest, whatever expense, we debit that expenses, and we credit accrued expenses account. So accrued expenses and expenses, those are the two accounts affected. Accrued expenses is our expenses, so it's an add there, plus, so therefore debit. Accrued expenses are debit. Accrued expenses is current liability account, so therefore it's on the credit side. Okay, an example of accrued expenses, we have this trial balance. During the year, we have paid $550 for insurance. At the end of the accounting period, this information shows that we have insurance unpaid on balance they amounted to $75. So they have discovered that $75 is still yet to be paid. So the question there, show the information provided in the timeline, determine the general journal entries to be made, so the effect on the new trial balance, the profit and loss, and the. So therefore, the accrued expenses example on the timeline. So we have the purple line, and the blue line there says the expenses paid trial balance amount is 550, but the expenses due according to the additional information is $75. So therefore the insurance for the whole year is 550 plus $75, that will come to $625. So that is the information that we have to deal with. Total insurance is now $625, so including the expenses due. We write it down onto the general journal. It looks like this, where we have debit the insurance account, credit the insurance due or the accrued insurance. So insurance debit $75, insurance due credit $75. Next, we saw that on the old trial balance shows that we have paid $550. So therefore, from that old trial balance $550, note that we are going to increase. We're going to add that $75 that we have just debited. When we debit $75, what will happen is that 550 will increase. So now when we look at our trial balance, the new trial balance, like what we have just said, the new adjusted trial balance, we have insurance of 550 plus $75 will now be 625. I hope that is clear. Our insurance for the year is 625 and not 550. While on the other side, also increased by $75 when we include our new account, which is called insurance due $75. So both the side of the trial balance will always be balanced. We have included $75 on the debit side and $75 on the credit side. So therefore, our new adjusted trial balance will remain balanced after this entry. But preparation of the final account, the insurance is an expenses. Therefore, we'll go to the profit and loss account. Insurance due is what we owe, so it goes to the current liability in the balance sheet. Profit and loss, effect on the profit and loss. So the insurance is now 625. That's from our new trial balance. And effect on the balance sheet, like we have just said, balance sheet on the credit side, we have current liability, insurance, $75. Okay, just a quick recap on what we have just discussed. First one, the definition for accrued expenses refers to expenses yet to be paid. Okay, it's due and yet to be paid. The next one is information provided in the timeline. Okay, the one that is given there, it's a model for monthly amount paid during the year, and then we find out that it's up to March and still have 4 months left. So that if the balance adjustment or balance day is at the 30th of June, that's a model for monthly timeline. The next one is to determine the journal entries. We have found that we debit expenses and credit the accrued expenses, because accrued expenses is what we owe, it's a liability, or it's on the credit side. Next one, we show the effect on the neutral balance. So there will be one on the debit expenses, we'll add the due, and on the credit side with the expenses accrued, it's a liability on the other side. Next one, we show it on the profit and loss. Effects on the profit and loss, the expenses account will be on the debit side with a new amount, whereby we add the due and the total value of the older trial balance together. And lastly, the effect on the balance sheet, it will be on the credit side, current liability, and expenses due. So in a nutshell, so this is what we have just gone through. First, we go through the timeline, the journal entries, what will be the effect on the neutral balance, effect on the profit and loss, and effect on the balance sheet. The same thing will be repeated on to the next topic. Okay. Looking at our worksheet activities, so this is worksheet number 1. We have interest of $325 and additional information. Insurance interest unpaid on balance day amount to $75. So you are to prepare the timeline, show it on the timeline, journal entries, neutral balance, profit and loss, and the balance sheet. Worksheet number 2. In this case, we have weekly wages. It says there, assume Pure Beauty pays a weekly wages of $250 to a sales boy each Friday. So every Friday is a payday. The balance day for Priya's Beauty falls on Wednesday, 31st. So by Wednesday, the books is closed. But this boy has already worked for 3 days and he earns 150. We are not going to give the 150 today because payday is on Friday. So therefore, we have incurred some expenses that we have to pay, but we are going to pay later on Friday. So therefore, that 150 is wage due. So this timeline is based on in days. Timeline in days. Balance day is on Wednesday, but payday is on Friday. Wage due up to balance day on for Wednesday is $150. So two accounts of fact will be wages and wage due. So that on the timeline is already shown there. So number 1 is already done for you. So you can do number 2, number 3, number 4, and number 5. That brings us to the end of the session. This will be available on YouTube. You can subscribe and like and subscribe and share it to your friends. And thanks for watching. Hope to see you again. Goodbye.